Following up on the first target as it's been met on Solana from the last week or so, well, the question now remains, where end of cycle price predictions, of which perhaps we might even be seeing a doubling of effect. With that said, welcome back to EllioTrades channel. I'm host Krown again today with some good old TA, and yet again, this topic of the video has been generated from the comment section of the prior video. So please, I invite you to make your requests in the comment section, and I'll definitely go through them, and we'll see, well, what people want to see, and we'll follow up on it, of course, over time. Anyways, with that in mind, let's start off with the most important thing to be aware of. The first, right off the bat, the most important thing right here. And what is that? Of course, it is, we have hit our 230 target based off of the measured move from our prior accumulation zone. And what we're looking at right here, just a higher low structure. Again, please understand that higher lows just essentially imply, in a very logical sense, that buyers are getting aggressive. And we call this, after, well, a nice generational uptrend, reaccumulation in this case. That was resolved when we recorded this video. I believe it was, around mid to end of October, above 180, implying targets all the way up to the 230 level right here, of which we have hit that successfully yesterday. And now that does offer up what is the next sort of move. So with that in mind, let's go through it right now, as 230 is very important right here. Why is that? It was both the measure move and also the one spot 618 Fibonacci extension out of the prior base. So with that in mind, as long as Solana is now essentially above this current breakout level, which would be about let's call it 220 in this case, on a daily closure, I am looking for upside continuation, and I'm looking for upside continuation sooner rather than later. More importantly, as long as we remain above the one spot 618. Yes, of course, there can be short-term corrections, no doubt about that. Don't mind an ebb and flow in this market. But again, the long-term prediction is now very much still in play as long as that condition is met. Let's move into it now as we go on over here and just take a quick look at the next objectives, of which 300 and 350 going to be some big numbers along the way. More importantly, however, let's judge a few other metrics over here, of which I always want to start off with the BBWP. Remember, this was expanding specifically off of the daily lows that we did see just coming out of the prior higher low right here, which we identified late October as well. And the prior iterations of this same signature, again, volatility essentially just measuring the dispersion of returns. You can understand that as high volatility equals, well, very likely breakouts and very violent price action. Contracting volatility or low volatility implies consolidation. Well, the last few times that we have seen a similar read to this, well, the last one was right here before a 573% move to the upside. Not bad. The time before that, with an upside resolution, was over here. And I should always repeat, volatility is direction neutral. This one being about 365%, still rather impressive, although not as much as that first one. And of course, the one before that was way back on over here, nearly a year ago in December 2020, giving a 24% move within the course of 64 days. And, well, more over time as well. Anyways, that brings it to the next question. What are we potentially looking at for these targets? Well, we can once again reference the work of my good friend, Mr. Kevin, who has created this advanced RSI that essentially allows us to input a price that shows us where price action would need to be in order to create an RSI level of that designation. And on the 5-day chart specifically right here, we do see a historical relevancy of about the 90 to 92 level on the 5-day RSI. All of these peaks, which I'll actually kind of run a regression through here. That's actually 89.5 to 92. All of these peaks do correlate with these vertical bars, and you can see that, well, while they don't necessarily always get the exact high, it is pretty damn close. Close enough, I might dare even say. And with that in mind, well, let's say that we are expecting another continuation off this peak, again, generated from the prior buy Cs set in from the targets being met. Well, what are we looking at right here? You can see that I've already plotted a 90 read. That would imply a target of 464. Now, again, that would be a little bit on the lower end of this range right here. Technically speaking, we could maybe go up all the way to 92. This would be kind of more of a maximum, perhaps, for this next major macro move. And when we're talking about a move like this, we're not talking about this happening today or tomorrow. we're probably talking about this happening over the next couple months, if that. And of course, that obviously implies, not 0.2, but 92. That obviously implies that the invalidation conditions will not be met, which we're going to discuss soon enough. But a 92 read would put this at about 569.5. So we could create a range here that I would be looking at somewhere between about, well, in this case, 450 and 550. So we'll just make them nice, round, even, and psychological numbers. Doesn't mean that Solana can't go more over time, or that it can't reverse there and then go down to the depths of hell. Of course, that can happen, but I would be looking for this as my main sort of bias again, as long as Solana, more importantly, is closing dailies above 212, and more recently, more pertinent to the short-term timeframes, as long as Solana is above about 230. I do look at this as trend in motion right now with daily closures. Okay, I think we've nailed all that right there. I just want to look at this from one last angle. We're going to pull up, of course, our Bollinger Band charts. And I want to overlay the next sort of major macro validation condition for those targets. So if you see this happen over the next couple of weeks, this would be the next good thing to be looking for to essentially judge that, okay, these are still, very much in line with what we're looking for. And first and foremost, let's go down here. Let's see. Oh, what do you know? We do have a bit, of course, of an ascending triangle going on right here. Very similar to the one that we had before. Again, just higher lows implying reaccumulation. And with reaccumulation implied, and also a break above the topside resistance alongside a move above the topside Bollinger Band. So again, we have this being a volatility indicator, meaning that we have trend as this trend continuation. We have our higher lows and higher highs. We have volatility, and well, momentum for the 5-day RSI is certainly within the Bull's favor as well. So this does have a measure move, and that would be pointed up more short term for the 3.618 Fibonacci extension, which is, let me just put it over here. I can't see. About 269.5. Not bad. So that would be a more relevant target, perhaps over the next couple weeks here, assuming continuation and assuming that the invalidation conditions are not met specifically on the daily. Now, the next major validation for the long term, as I cut myself off before I got to the main punchline there, is on the weekly right here. If we do see any sort of a closure, preferably this week, although could certainly happen next week as well, above the topside Bollinger Band, we then apply that same condition, continuation condition to not just the daily, but the weekly. The weekly obviously being 7x the time frame of a daily means that it is more important, and that essentially implies that the result is to be expected to be, well, a much greater, obviously. And that condition will be met with a closure above about 245 to 250, let's say. If you want to be super conservative, 250, although you will have to watch this in real time. Anyways, you'll notice that the Fibonacci extension from the prior macro base would be pointed up towards where? Well, we do have several areas of interest along the way. The 4414 at 450 and the 4618 at about 520. Those targets sound very familiar. If we pull up our percentage gain tool over here, you'll remember from the Bollinger Bands, we are seeing anywhere between about 300 and 400% off of those same volatility reads, and actually about a 520 price read right there would be about 300% from the prior low. Actually, sorry, it'd be a little bit lower than that. So let's just double check here. I am OCD about this. Yeah, 350. Hey, not bad. So again, we're talking if these do hit, again, assuming that the invalidation conditions are not met, looking probably over the next 2, maybe 3 months, something like that. And well, I do expect, or at least I would say that it is relevant given the data. 450 to about 550 is a nice little range to be looking for. And I would be looking for, of course, pullbacks along the way on the short-term timeframes. We haven't really discussed anything under a daily here, so understand there will be ebbs and flows, as there will be ebbs and flows in the higher term timeframes, specifically around these pivots, about 269, and then of course once we get into the 400s and 500 territory, which will very likely come back and follow up on this analysis. Anyways, I think that's the end of this one. Nice and short and sweet. I want to remind you that I have my own channel. Changed the name, by the way, of which that's caused a lot of confusion, but it's just my real name. It's Krown Crypto now, and the link's in the description below. do Bitcoin analysis there daily, a lot more in depth. So, might or might not be relevant to you. And then, of course, we also have our Bybit link as well. A little bit of shilling going on right there. All good, though. Again, please understand this is for people who, already have some experience trading. Preferably, you're already successful and you just really want to take advantage of the deposit bonus. If you're new to trading, I would suggest strongly, I don't want to be your dad here, obviously, but I would suggest very strongly, do not trade a real account, certainly not on leverage. In fact, most people should not be trading at all. Hodling is probably the right call for most people who have a life. Unlike me, I do not have a life. This is my life right here. So with that in mind, trade responsibly, obviously, and we'll see you in the next one. Take care.